What is up, everybody? Welcome back to Bitcoin and Markets. Happy CPI release day. We are going to live react to the CPI release and see what's going on. You can see this is the screen here. Let me refresh and see what's going on. Next release, July 7/11/24, so 8:30 a.m. Eastern Time. We're going to look into this CPI release. Let me update my thumbnail on YouTube, and then we'll get into it. If I can do this quickly, hopefully I can. Let's see here. YouTube Studio. So 8:30. I expect CPI to be lower. A lot of people are expecting it to be lower. We'll read through a quick article before we get into it, hopefully before the CPI drops, and see what's going on here. Okay. Thumbnail updated. Let's go into another post here. This is from Zero Hedge. CPI preview. Everyone expects a light CPI print, resulting in a September rate cut. So Powell testified in front of Congress this week, and he had some arguably dovish things to say. I didn't watch the entire testimony, but I saw some highlights or read about some highlights, and so yes, he is sounding a little bit dovish. We have the SOM rule that's starting to kick in. That's unemployment is starting to pick up and hitting this certain level that always is hit going into a recession. And so a lot of people are talking about this. Powell has the MO of cutting early. Back in 2019, or sorry, when did he cut first? Yeah, 2019. He paused in January and he cut in July, August, and September, or those three meetings right there in the middle of the summer. And so he has the MO of cutting early before, of course, then COVID hit in March, right? And so Powell is probably going to be doing this, probably going to be cutting in September. Their dot plots are showing one cut this year. We will see. But if we do fall into recession, these things happen quite quickly. And so he could be cutting more than once. What does that mean for Bitcoin? A cut in Bitcoin, or cut in the Fed funds rate is going to be hyper fuel for Bitcoin. So let's see what this article says. Get into this. Is it worth noting that there is a normal distribution of tomorrow's core CPI, with most economists 55 out of 70 expecting 0.2% print? Okay, that's for core. Where is the actual headline? CPI is expected to rise 0.1% month over month in June. Let's see what the nowcast is saying. Inflation nowcast. You can tell I was not prepared for this stream, but we are going with it early in the morning. So there you go. Nowcast. They have June at 0.07% and July at 0.25%. Of course, August is the big one because August of 2023 came in at 0.5%. So if that comes in low in August, that's going to take a huge, swipe at the year-over-year rate. I'm thinking we can be down below 2.5% by that time. So, okay, that's what CPI Now is saying. Let's go back to the BLS website and refresh. I'm showing 828. So we have a couple minutes to look at the charts. Here's the Bitcoin chart. We'll see how this reacts to CPI. We'll go down to the 15-minute. We did break higher today. If you see this line that we've been watching at the bottom of this flag was from this candle right here and over. Okay, and so we did break through it yesterday, but then closed below it. If we bring the 200-day moving average up, this orange line, we are pushing up on it right now. This is the 20-day up here. In the past, we have rallied into this cross of the 20 and the 200. and then we go sideways from there. It passes, going back to August of 2023. 50-day moving average is way up here. There's a cluster of resistance up here. And of course, if we go to a heat map and we look at all the liquidations, there is a big hotspot up here at 72,000, which will act as gravity. Gravity is pulling the price up to these things. Okay, so it looks like it just dropped because we got some movement in the Bitcoin price. So let's go back to here and refresh the CPI. CPI for all items unchanged. Oh no, that's still that is still May. Bitcoin is moving, so some people must have gotten updated. If you guys are watching on YouTube and Rumble, like, comment, subscribe. If you're watching on Twitter, jump over to the Rumble and the YouTube and subscribe over there. Comment over there. I will see all of your comments. Let's see. We got. Oh, I just minimized that. Thomas Bunting, what's going on, my man? Good morning to you as well. Okay, come on now. 8:30. My time is showing 8:30. This website's still saying May. Here we go. CPI for all items falls 0.1% in June. Falls, guys. We got a negative print. I've been waiting for this negative print. Come on, people. Wow. Negative for June. Let's read into this. CPI declined 0.1%. What? Guys, what happened for higher for longer? This gives a massive room for now Powell to cut at the next meeting. Massive room. Come on, man. This has been transitory the whole time. Let me go back to the chart and I'm going to look up. Share this tab and get rid of these moving averages. Oh my gosh. And oh man, we need to make this up. Need to make this line white. I've changed my chart here a little bit. Look at this. This is going to come way down here. It's replacing a 0.2%. So this is going to fall down to 3.1% year over year. And guys, I've been calling this transitory the whole time. Some people were saying this is going to be a liftoff the other direction. Okay, some people were saying this is going to be a liftoff back up like this. And I'm like, heck no, this is transitory. We're going into recession. It's going to come down like this. Just wait. Okay, let's go back to the release and read a little bit. On a seasonally adjusted basis after being unchanged in May. So it's negative 0.1% after 0% last month. If you take come on, people. Over the past 12 months, it's increased 3.0%. We're going in the right direction. The Fed is going to cut. That's going to be extremely positive for Bitcoin, just as it's from a psychological level. Okay, this means, as CPI is going down, it means recession, which you would think would be negative for Bitcoin, but it's not. Okay, because people perceive a cut as being stimulative. And so this is going to be massively bullish for Bitcoin. The index for gasoline fell 3.8%, and it's going to fall more. Okay, as we go into the election season, as we get heated up into the election season, okay, they're going to release out of the SPR more and more gas, and it's going to drive the price of gasoline down further. I mean, I haven't necessarily noticed this time. I guess maybe at the beginning of June, I noticed some lower gasoline prices. But recently, I have not noticed gasoline being down. But the CPI is showing the gasoline index, it fell 3.8% in June after declining 3.6% in May. And it's going to keep going down. They're going to release from the SPR. Biden is going to release this stuff. just like he's going in flip-flopping on the immigration. He's going to pump that gasoline price or pump out of the SPR and pump it down, pump this price down, um, more than offsetting the increase in shelter. So we'll take a look at shelter. Shelter is a lagging indicator, and it has been higher for multiple months. It has been the highest thing in the CPI for multiple months. And once this shelter starts coming down into recession, man, oh man, the CPI could dive. And I have been expecting a negative print. I've said this multiple times throughout the year, and we do finally have a negative print on the CPI. The energy index fell 2.2% over the month, as it did the preceding month. The index for food increased 0.2% for June. The food away from home index rose 0.4%. But people that are eating away from home, come on now. I've seen a lot of headlines about the restaurants are struggling. They're shutting down locations. And food away from home getting more expensive. I mean, that could be a lot of things. But restaurants are closing their doors, and people should be eating at home anyway, not away from home. You eat healthier food. It tastes better. It's made with love at home. And so, come on, food away from home. Do not be eating away from home. While the food at home index increased 0.1%. And it's better for your pocketbook if you eat at home as well. It's better nutritionally, it's better financially, and it's better made with love. It tastes better. The index for all items less food and energy rose 0.1%. Okay, so this is core, rose 0.1% after rising 0.2% the preceding month. Now, 0.1% annualized, of course, is 1.2%. So 1.2% pace. That's what we're at for core, leaving plenty of room for the Fed to cut. Indexes, which increased in June, include shelter, motor vehicle insurance. Okay, insurance is the big one as well. Lots of different insurance. I know living here in Florida, home insurance has increased. Motor vehicle insurance has increased. That's going to weigh on people's pocketbooks as well. But shelter and insurance are the two big ones that have been increasing. Home furnishings and operations, medical care, and personal care. The indexes for airline fares, used cars and trucks, and communication were amongst those that decreased over the month. All items index rose 3.0%, a smaller increase than the 3.3% for. So this must have been even bigger than 0.1%. This must have been over 0.1% and rounded to 0.1. So it might have been a decline of 0.14. And that's what's pulling from 3.3 down to 3%. Okay, wow. The all items less food and energy index rose 3.3% over the last 12 months. Okay, 1%. All right, let's look at this table. So they break these things down. Gasoline, we can see negative 3.8%. New vehicles, 0.2%. Used cars and trucks, negative 1.5%. And shelter here, 0.2%, guys. Wow, that's the lowest print on shelter in a long time. Finally, shelter is starting to catch down to everything else. Look at this, 0.4, 0.6, 0.4, 0.4, 0.4, 0.4, 0.2. This is big. This is big. Shelter is coming down. And that, like I said, is the biggest component here. Okay, let's go to the charts. We'll go to Bitcoin. It's rising 165 right now. We'll go down to the 15-minute. Look at that candle, man. It's pumping. It's pumping. What else we got? What's not delayed? The dollar. Look at this dollar move. Holy cow. Dollar is down, breaking out of this pattern that we've been following for a while. It's breaking down. So the dollar is interesting because as we go into recession, the dollar should go higher. Initially, the dollar will go lower because it will react psychologically to any sort of cuts, any sort of fiscal stimulus that happens. And so the dollar should go down. However, as we move through recession, the dollar will go higher. So expect the initial move into recession, into rate cuts, the dollar going down, but it will turn around quite quickly and go higher because of in a recession, people are having a hard time meeting their debt repayments. And so there is a shortage of dollars. There is a shortage of dollars out there during a recession. And so the dollar will eventually go higher, but the initial move will be lower because of all those things that I just mentioned. Okay. Oil, no real effect here on oil. Let's see the US 10-year. Wow, US 10-year broke down through this midline of the channel we have been watching, going lower, 4.2% right now. Right here at this bottom here. So let's draw a line right here. So we are not only going down to the bottom of the channel, but we are also breaking the lows right here. And people, there's so many people out there that have been crying about, oh, inflation is going to be higher for longer. We got the U.S. The interest rates are going to be higher for longer. But what people don't understand is that higher interest rates mean the economy is doing good. We just covered this in yesterday's live stream. Higher interest rates mean the economy is doing good. More people can afford a higher interest rate. More people are credit worthy. More people are able to pay off their debts in a robust, well-functioning economy. As the economy gets worse, that's when the rates go down because the banks are narrowing the creditworthiness of borrowers who can borrow, and they're not giving it out to anybody. Plus, it gets harder to pay off. So rates go down. The new loans are narrowed to more creditworthy uses, and rates fall. Rates fall. All right. Now we have the S&P 500. This is the futures. It is delayed, but yesterday, look how it closed yesterday. I mean, just massively higher. Okay, delayed by 15 minutes. So we still need 3 minutes until we get the initial candle response from the S&P 500. But look at this. It's just going one way. And we looked at multiple things yesterday as well. If we go to my Twitter, sorry guys, let me go to my Twitter and we'll find this that I talked about yesterday. Okay, there is still some juice to squeeze out of this bull market. So the average here for number of stocks in the S&P 500 over their 50-day moving average, it's down to 43%. The highs occur above 50%. So we need to see this go up above 50% and significantly. I mean, we got to rally a little bit. So if that is the case, okay, if the S&P 500 is going to continue to go higher, now we take a look at this other chart. The divergence between Bitcoin and the stock market. This is NASDAQ, but Bitcoin, I expect Bitcoin to catch up to the stock market, just like it did back here in 2019, prior to this recession. COVID was a singularity. It was very unique. Without the COVID crash, we probably would have seen this just continue higher. And so Bitcoin caught up with stocks. Bitcoin is going to catch up with stocks again here today. Okay, let's see if there's any comments here. Thomas Bunting is saying, pump it, baby. Pump it. Okay, let's go to the Bitcoin chart one more time. We're sitting at 58.9, back below 59,000, but this should be above the 200-day moving average. Let's bring those up. We broke above it And I'm saying we're going to rally into this cross. We are right now technically below the 200-day moving average, but we are challenging that, and it'll probably end higher. Okay, 844. This delay is not over yet for the stock market. Oh, there we go. We got some candles here. Big pumpage to the upside on this candle. Big time for stocks. Bears are crying right now. Bears are crying in their little blankies, in their little beds, and the stock market is going higher. The bulls for inflation are also crying. They are expecting this higher for longer CPI, and of course, we're going to get lower. This is transitory. It's been transitory the whole time. And I've been saying it the whole time. And the reason for that is because of the way the system works. Most people don't understand how the debt-based system works. Right now, we cannot have sustained growth and inflation because of the debt burden. We have diminishing marginal returns on new debt. And so we cannot have sustained growth and inflation. We're going to get low growth and low inflation until we change the system, until the system is revamped into a Bitcoin standard, into a new form of money. That is what we are doing here. Okay, let me check Telegram and see what's going on over there. Are there any comments? No, there are no comments. Do I have people? It's early in the morning. People aren't used to these early in the morning. We got Nick Six, Tony, and Larry Jr. here. What's going on, guys, on Telegram? If you are watching on YouTube or Rumble, check out the community on Telegram, t.me/Bitcoin and markets. Also, check out bitcoinandmarkets.com. Let me go to my website, bitcoinmarkets.com. Make sure you sign up for the free weekly newsletter over there. You'll stay up to date on all the stuff I am putting out, written content. And if you're subscribed over on YouTube and Rumble, you will stay up with all my live streams. So, all right, guys, I appreciate you hanging out this morning. CPI is negative for the first time in a long time. And we were expecting this. All right, guys, have a great day, and I'll see you on the flip side. Bye.